Alrighty, today is March 18th. I'm gonna be going over price action today. I took no trades. I did paper trade some possible setups that we had, but obviously no trades today. Why? Because overnight, what did we have? A 300 300 point dump, right? 300 point dump. We also have FOMC press conference later today, right? FOMC press conference, FOMC statements as well. And then we have PPI at 7:30. So just an absolutely low probability condition day. Um, no reason to trade. Sitting on your hands and just taking no positions is a position in itself on days like this, right? So we just know this isn't high probability. Um, I'm going to get zero FOMO from any trades that played out. Could have gone against you just as easy as it played out, right? So coming into market open, what did I see? I saw that we were very overextended, right? We had gone almost 200 points without a retracement, right? Up until this point right here. I knew we wanted to retrace maybe into the discount of the area. We also did have this unfilled 15-minute fair value gap that I knew price did probably want to come retrace into. Before continuing to move lower on the higher time frame, we were still reacting inside of this 4 hour, right? So still reacting inside of this 4 hour. So I mean, I was gonna take no trades. I expected us to come for a retracement, right? And then I obviously didn't want to go against the overall higher time frame bias. So if I was gonna paper trade anything, it was gonna be shorts for sure, right? So we come into market open. What do? We come tap into this 15-minute fair value gap, right? And then we created an SMT with these highs. ES came nowhere near them, so we created an SMT. I saw that we were respecting this 3-minute fair value gap heavily, right? So we created the 3-minute fair value gap, basically the only fair value gap that we had in this entire leg up. So I was watching that, right? So off open, we come down, manipulate into this 1 minute, also respect this 3-minute right here, and then we get displacement upwards, right? We're respecting this 15-minute the whole time, right? We never get anything above that. We ended up not retracing into the 0.5 of the area, but we did get a retracement into the 15-minute unfilled that I knew I wanted to see price come back into, right? So following that, what do we get? We're still respecting off of this 3-minute the whole time, right? Price taps it right here, we respect. Price comes down again, we respect. We get a move higher. What do you get? 1-minute inversion, right? So 1-minute inversion, this candle body close is not obvious. You would not want to take something there. Something like this, I guess you could have taken on paper trading. I didn't take this, right? But could have taken something like this, targeting this unfilled 3-minute again. Done a quick break even, obviously. This would have been a quick break even probably at this low right here. This just wouldn't have played out. It would have been break even, right? So the other trade that I did see, though, that I did end up paper trading that I did like, right, was this setup right here. Okay, so what do you get? You get a tap back into a previous fair value gap that got inversed, right? Tap back into it. Great displacement through this 1-minute fair value gap. Create an inversion. Could have taken something like this, and I did actually take something like this. I can't remember where my stops were. Targeting these relative equal lows below, right? So right here I had these marked out, relative equal lows. My break-even point was at the 3-minute unfilled, the 3-minute fair value gap that price has been respecting, right? And what do? I think I had my stops at this body right here, right? So we come up, going to draw down a little bit, right? And then we come down, tap into this 3-minute. At this point, I'm break even, and because if we are going to go lower, I just want to see us flush to this 3-minute, right? There's no reason for us to come retrace and then move back lower. So this one, break even. You get another setup, same setup kind of as the first one. We come back up, sweep out this internal high, and then you get a clean 1-minute inversion to the downside, right? So this you could have taken Paper traded this as well. Obviously, I'm not taking anything with real funds, right? But we are paper trading. Come up, stops above this high. Again, targeting these relative equal lows. Again, you go break even at this 3-minute unfilled. And this would have played out, right? So this would have played out. What else did I see? This was a great setup as well. What do? We inverse this 3-minute. The price is respected multiple times, right? We respect it. Let me get my drawing tool. I can't remember where it is. Why do I always forget where this is? Right, so we respect the 3-minute right here. Respect it again right here. Respect it again right here. Respect it again right here. So we're just respecting this over and over again, right? And then, so this makes this fair value gap very high probability if we are going to inverse it, right? So we get the inversion right here. Stops above this high. What does this lead after? I wouldn't have taken this by itself, right? But what you get is you get a 1-minute retracement into this fair value gap. I would have probably entered right here off of this. So we get a retracement right, and then we get a candle showing downward displacement, entered right here. And then you could have targeted these overnight lows, right? So pre-market lows, I mean, sorry, right here. And this would have played out again for a 1 to 2. Could have gotten break even just at this internal low down here, and this would have played out. You also could have held down to the this 4-hour fair value gap, as well as this liquidity right here. And that drawn liquidity is these equal lows that price created during yesterday's AM session, right? So that would have played out. I like that. And then as far as what we're seeing right now, ES has come down. Let me pull up my ES chart on my other monitor. ES is trending down towards London lows, right? We've swept out pretty much all the liquidity that NQ has failed to take out right now. This is high probability right here, drawing liquidity, right? We have a low inside of a 15-minute fair value gap. London's already taken that out, so we have an SMT right here. I do think this is a strong drawn liquidity, so price will eventually come down and start trending towards London lows. But it looks like ES is about to take out London lows. So what you could look at is shorts out of here. Obviously, still nothing very high probability. We created an unfilled 5-minute. Price could retrace up into that. But as of right now, we are reacting off of a 4-minute. If you saw a 1-minute inversion, that's high probability. You could have taken it maybe something like this, right? We did create the 5-minute, so I mean, I don't know if this would. I probably wouldn't take this. I'd probably wait to see if that 5-minute got filled and then look for a continuation down lower. Either way, not high probability conditions. I'm not taking any of this today. And then this is that 15-minute low right here. So you could take something like this. Looks like you're just getting chopped up. Go break even at this internal low. So overall, a couple good setups, but price action was just not good. I mean, when you see something like this, right, you just have to realize this is nothing about this is high probability conditions. Sit on your hands for today and not take anything, which should make you feel good, right? You need to stay disciplined. When it's not high probability conditions, you're not forcing anything. You're not taking any trades that aren't extremely obvious, right? So just paper traded today. Liked some of the setups that I saw. This one would have ended in a break even. This one would have ended break even. This trade would have played out, and this other trade would have played out off this 1-minute retracement off the 3-minute inversion, right? So a couple good setups. Not taking anything though. As far as what to expect, we have unfilled hourly below, unfilled hourly above. We're inside of this order block right now. London lows down here, which is also a low inside of a 1-hour fair value gap that I could see us coming down to take before getting our retracement up further, right? I don't see us coming down low for all of these lows just yet, right? So bullish in the higher time frame. We're getting our extremely bearish retracement down below into this 4-hour. If we inverse this 4-hour, then I could see us coming for London lows, right? And then maybe taking out this low inside of this 4 hour for a value gap. But not expecting that. I'm not convicted by that seriously. So yeah, so that's about it for price action today. No trades today. Not high probability setups. Again, you got to remember, if we're dumping 300 points overnight, and then we have stuff like FOMC. We also had PMI at 7:30 this morning. So just overall, just nothing should tell you like this is high probability conditions to go in and see if you can catch a trade, right? So sit on your hands today, which is exactly what I did. And yeah, so that's about it for today. I'll be back tonight for another backtesting session, and then we'll see what price action brings us tomorrow, right? So tomorrow we have unemployment claims in the morning, so just watch out for that. And then Friday's a good trade day. Friday is OPEX, right? So all the contracts are expiring the third Friday of every month. So you're just going to watch out for that as well. I'll decide if I want to be taking trades at that point a little later on in the week, probably tomorrow. I'm just seeing how price action goes, and then I'll come into Friday morning, see what we're doing, understand that it's OPEX, and just evaluate from there, right? So that's going to be it for me for this market review. And yeah, I'll be back for a backtesting session later today. And yeah, that's it. That's going to do it for me.